Okay, now I want to talk a little bit about the risk to reward. This is the most important feature for me in Forex trading. In all the years I've been trading, this is the one thing that I can tell you is the most important. Money management is, is king. If your risk to reward is spot on, you will make money. You will see with our trades, our risk to reward is really important. Definition of risk to reward ratio in Forex trading. If you don't know what the risk to reward ratio is, then here's a bit of explanation. One of the biggest foundations of Forex trading success is knowing what your risk to reward ratio is and applying it in live Forex trading. In simple terms, the risk reward ratio is a measure of how much you are risking in a trade for what amount of profit. For example, if you risk 500 in a trade, your profit needs to be 1,500. That's 1 to 3. Of course, it's 3 times. Your profit is 3 times your risk, which simply means your risk to reward ratio was 1 to 3. This also means that for every $1 you risk, you have a potential to make $3 profit. Why is trading risk reward ratio important? Risk reward ratio is important in Forex because of one thing only. You want to make more profits than you are risking. In that way, no matter the trading losses that you suffer because of the risk to reward, you always get ahead. Let's go back to the previous example. You place the trade 500 initially and take profit at 1.5. Let's assume that that's the first trade and you make profit on that trade. Now place your second trade and you make another 1.5. Great. Now you place the third and you make a loss 500. Now you place the fourth trade and you make another loss. But then you look at figures, you are down 1,000 in Forex trading account, right? How much did you make in the first trade? 1.5. So the profits of the first trade are cushioning your $1,000 loss. You still have 500 in profit left over from the first trade. The second trade profit is still untouched. This example shows the beauty of having a risk to reward ratio 1 to 3. And above, you can suffer 20 trading losses in a row, but if you stick to your risk to reward ratio, you have a lot more chance of coming out in front again if you start having some winners. And we've seen that in the trading this year. In the beginning of August, our first 12 trades was losers, and then 4 trades later we were in the money. Very little money, but we were in the money. So you can trade with calmness, because you know the next 2 or 3 trades that we're going to win, and we're going to win. We're going to be in the money. So here are the benefits. It allows you to have many losing trades. Yes, you read it right. That kind of risk to reward always allows you to have a lot of losing trades, assuming that your trading risk is fixed on each trade, but these losing trades do not significantly impact your Forex trading account negatively. It allows you to have a few winning trades to accelerate and become in front again. Larger time frames can decrease your risk to reward. I always encourage my students to look at the larger time frames, but if the larger time frames show you that the market are going to reverse, they're going to go up, or there's a big candle showing the market's going down, the best thing to do is to go and look at your time frames, the lower time frames, maybe the hourly time frame, to get an entry. Because if you can get a hammer or a shooting star after you saw on the bigger time frames the direction of the market, your risk is going to be a lot smaller than the bigger time frame. Because on a big time frame, a small candle can be a lot of pips, whereas on a 1 hour chart it's much less. So that's what the point I want to make on this one. If you look on this one, there is the hammer on the support here. So you bought there, your stop loss is there on that trend line, and then on support here. So you're risking 117 pips. Then your target is there. So your target is 226 points. So that's a 1 to 2 risk to reward. We are looking for 3 or more. That's what we are looking for. But even 1 to 2 is not bad, especially if you're already in the money for the month. Here's another example. You bought here. Your stop loss is right there. So you're risking 63 pips. Then your reward, because that's the big support, we're aiming for that. That's your profit target, is 280 pips profit. So your risk to reward on this one is 1.444. That is better. I think the first one was on a daily chart. This one is on the 4-hour chart. And this one is on the hourly chart. So you see your entry is there. Your stop is under the line there. Only 32 pips because it's a lower time frame. And then you go for the profit there. So it's 311. That's a risk reward 1 to 10. That's awesome. If you can just do 10 of them in a month, you're definitely gonna make a lot of money. You need to be correct 3 times, 3 out of 10. You already make a lot of money. Yeah, that's the importance of risk reward. I want to imprint this. If you take nothing away from this course, just take away risk reward, because that's the most important thing. And it took me a long time in my journey to realize how important it is. Although I told somebody the other day that the very first book I ever read, the guy said risk to reward is important, and it was just over my head. And most traders, because you're always looking for this perfect strategy. There is no perfect strategy. You must get one that's at least 50% correct of the time, and your risk to reward needs to be a 3+, and then you'll make money. But that's really important.